Hi everyone, we're going to be solving today problem 8A from chapter 7 of the book Financial Accounting Tools for Business Decision Making, 8th edition. So problem 8A reads, Bastille Corporation prepares monthly cash budgets. Here are relevant data from operating budgets for 2017. You have a list of sales, purchases, salaries, administrative expenses, and selling expenses for both January and February. And it reads, all sales and purchases are on account. Budgeted collections and disbursement data are given below. All other expenses are paid in the month incurred. Administrative expenses include $1,000 of depreciation per month. Other data says, number 1, collection from customers, payments for purchases, other receipts, other disbursements. The company's cash balance on January 1st, 2017 is expected to be $46,000. The company wants to maintain a minimum cash balance of $40,000. The instructions for the problem says, prepare a cash budget for January and February. So on this screen, I started the cash budget with the company's name, Bastille Corporation, the name of the statement, which is cash budget, and the date for the month ending February 28, 2017. Included 2 columns for both months, January and February, and the categories that we're going to be including in the cash budget. We're going to start off with the beginning balance for January, which you can read over here that it's $46,000. Afterwards, we're going to enter collections from customers for January, $326,000. We're going to ignore what it says for sales because the problem states that all sales and purchases are on account. So we're only going to use the data provided under other data. We'll do the same thing for February. We get $378,000. And we move on to notes receivable. On part 3, it says that for December 31st, 2016, we collected $15,000 in notes receivable. We're also told that there is proceeds from sales of securities in February for $4,000. Then we're moving on to cash disbursements, which we can read in purchases, that they're going to pay payments in January $110,000 and February $135,000. Afterwards, we receive the totals from the column up here. So for salaries, we have $84,000 for January and $81,000 for February. Administrative expenses, we're told that there's $72,000 and $75,000. However, it says administrative expenses include $1,000 of depreciation per month. Now, in cash disbursements, we're not going to include the depreciation since the depreciation expense does not use cash. So we're going to subtract $1,000 from the amounts that we're given here. And instead, we're going to put $71,000 for January and $74,000 for February. Selling expenses just include the information, $79,000 and $88,000 for February. We're also told in number 4 that there are other disbursements, cash dividends for February for $10,000. Okay. Now, total receipts gives you the total from collections from customers, notes receivables, and sales of securities. Total available cash includes this total, the $341,000 for January and $382,000 for February, and adds it to the beginning cash balance. And total disbursements, we add purchases, salaries, administrative expenses, sending expenses, and dividends. The difference between the total available cash and the total disbursements is listed in excess or deficiency of available cash over disbursements. For January, we have $43,000. We were told in the problem that the company wants to maintain a minimum cash balance of $40,000. And since 43 is more than 40, we're fine and we don't need to do any financing or borrow any money. The ending cash balance for January translates to the ending cash balance in February. Same totals are calculated. However, $37,000 is the amount of money that we have available, and since they want $40,000, we're going to subtract $40,000 from $37,000, and we get $3,000 that we need to borrow in order to complete the $40,000 that they want to keep in cash. And that's it. If you have any questions, just let me know, and I'll try to answer them as best as possible.